Hello everyone, my name is Greg Hannam and welcome to Personal Evolution. So today I have a bit of a different video for you, but it's something that I'm really interested in and I hope to make more videos of in the future if you guys find it interesting. So what's been happening? Well, I've been watching the development of the GameStop situation over the past week and I feel it's time to weigh in. So if you don't know what's been going on and you're interested in trading in stocks, I suggest you stick around. Or you want to get an outsider's take on what will happen next, stay tuned. I'll deliver the bull case for the GameStop buy and the bear case regarding GameStop and make a prediction for where it will go, what's going to happen next, and what I'm going to do about it. So if that sounds good, stick around. First of all, let's get rid of a disclaimer. So first of all, this is not investing advice and do not treat it as such. This content is intended to be used and must only be used for informational purposes. It is very important that you do your own analysis before making any investments based on your own circumstances. And please do reach out to an independent financial advisor if you don't feel like you're making an informed decision, or someone to check your work, basically. So with that out of the way, let's get down to business. So where does this all start? So this all started when short seller Citron announced its price target for $20 for the stock of GameStop. Now, that is the higher end of Wall Street expectations. But if you don't know GameStop, it is a retailer that is similar to Game. It may even own Game here in the UK. But what it does, it sells video games. And yeah, that's pretty much all you need to know. You know, it buys and sells video games. You can take your old ones in, trade it. But when this short seller Citron announced its price target of $20, and I think it was trading about 25 at the time, the Reddit community wallstreetbets took interest in it. And they started posting their positions in the stock because they believe there's fundamental value there. However, as they've posted more and more, the 2 million strong or so at the latest count, the community of traders, it's caused everyone in there to jump on the bandwagon, pushing the stock even higher. And this morning, I'm currently reading it off at 10:29 GMT. The stock is at 118 US dollars. Up 53% in, oh my god, 119. It is flying. If you look at the month, it was down at $20 not on the 11th of January. So we're seeing massive gains. 120 now. I'm going to turn that off because it's getting crazy. So like I said, let's take a look at the bear case. So why the short sellers might be right, and the bull case for why the Redditors and maybe the other people who are long it might be right. So in the comments below, I should, in the description of this video even, there should be the two bear cases that I've looked at for my research in amongst some financial analysis that I've done myself. So let's go back a few years, rewind the clock, and see what GameStop is doing. So 2013, short sellers have started their short selling, and it's been profitably shorted all that time till today. So the market correctly bet on the digitization of gaming, and GameStop has just not kept up. It has plunged in sales from 9.5 billion in 2011 to 6.4 billion. The EBITDA, which is a measure of profitability after depreciation and amortization, has dropped from 839 million in 2011 to only 111 million. And the reason for that is the digitization. So consoles and all that, you don't go to a shop anymore, you buy it off, well, Amazon, maybe GameStop if you're Reddit now. Other than that, net income has fallen 339 to a loss of 470. And in the most two recent quarters, GameStop lost another 277 million. So this is kind of the bear's point. And if you're looking at this as kind of just a financial analysis, then, you know, I think I tend to agree to you. And that's where we come on to probably the more bearish case. Now, there was a couple of things you need to know here. The price that GameStop was trading at was at half the times its revenue, which for any business is unheard of. Usually you get some multiple of your EBITDA, which is generally more than your revenue as a number, as a multiple number. So trading at half the revenue means that the outlook is so grim for this stock that people don't even think it's going to make enough. Well, less than half is crazy. So that was the first thing. The valuation was super low. And to kind of compound that, if you look at the free cash flow of the last 4 quarters, which was 320 million, GameStop, and assume GameStop will be able to generate the same in the years to come, it leads to an intrinsic value of $49 for the GameStop. So if we were trading at 20, we'd kind of expect $49 with a bit of a discount and stuff. So that shows that the stock is undervalued from a valuation point. So undervalued. The short sellers had sold 140% of the company. Now what that means is they're betting so heavily on it that that there's more contracts out against GameStop than GameStop has stock, which is crazy, and it's something that only happens in finance, where you can sell more than 100% of something. So we knew from the start that this stock was hugely shorted, and maybe overly shorted, which kind of forms the first two pillars of the Reddit's kind of pushback. Now let's take a look at the market size and how that is growing. If you look at retail, and we all know it's kind of going down the pan, it's pretty dire for GameStop, and maybe that's what the short sellers are looking at. However, there is something interesting when you dive into the numbers, which is that GameStop has been growing in the e-commerce section 300% year over year, which is huge. And this market is only getting bigger. My personal view is that the biggest companies in the world will be crypto and gaming in the future. And it's already worth hundreds of billions with an explosive compound annual growth rate, with more and more young people growing up to be kind of gaming socially and stuff. I just think it's going to absolutely take over. So that leads us on to the actual company itself. What's so special about it from a bull case? Well, not much. I mean, we know from the past that the management had been failing, but in the last 12 months, they brought on some pretty great investors. A couple of activists, ex-Nintendo president, great stuff. And then finally, the last piece of the puzzle is Ryan Cohen has just invested, which I think he owns about 10% of GameStop at the moment. Now, Ryan Cohen, if you don't know, sold an e-commerce business that he grew from the ground up in the pet vertical to a competitor for $3.35 billion. So he's a bit of cash behind him, and he is capable of growing an e-commerce store. He has written an open letter to the GameStop board saying, you need to turn your shit in, like literally get on it, because you have such market power that you could dominate this. Now, he does have a proven track record of scaling and exiting an e-commerce business, but I think the question is can he do it this time? Now, he's not even on the board yet, and so there's a few things there for the short sellers, but he is interested, and it may be the case that he does a hostile acquisition. So basically watch this space. The final bit that I think one of the Reddit users pointed out was the unit economics, which is very interesting. So unit economics is how much money per unit sold or whatever that a company will make. And at the moment, it's shares are priced at an extreme discount to its revenue. So going back to that original point of it was the valuation was half of it. Most e-commerce business will be trading at like 20 times their revenue. And this is, if you value GameStop as an e-commerce business, it will still look cheap even at $120. But it all depends on this execution from the board. So the important thing to understand is that GameStop is in an interesting place. It is definitely oversubscribed from the short side. It is massively overbought from a technical side, but that just can't keep up with the level of interest. What I think is amazing in this case is the power that Reddit and specifically wallstreetbets has to push a price of a stock up. And that brings me on to my kind of scenarios that I think could happen. So, what could happen this week? Well, we've already seen that the bulls are keeping pushing for now. And, today it's already up. I can't remember what it was. I'll get the price up because it's probably sold again. It's already up 49% today. 75% and 49 points. Which is crazy. And what this means is we could see that the short sellers get squeezed out of their positions, which is when they can't keep up with the payments to keep the position open. What I feel is more likely to happen, and this will bring me on to what I'm going to do, is that I think the short sellers will sell some of their more profitable shorts in favor of keeping this open. Because now that the price is at 120, if you short it at that price and it goes back to even, $80, you're still making a ton of money. And so I think we'll see more and more short interest. Whether the people can actually short it is another matter. And that will start driving the price back down. The second thing I think is likely to happen is that wallstreetbets as a community will start thinking, okay, we've all made money now. It's time to get out. And the people who move first are going to make a shit ton of money, and the people who are left holding it are going to lose, which does invite someone like the SEC to come in and look at them and go, okay, this subreddit, is it actually an organized entity for pumping stocks, which is when you push up the price and dumping them. So pump and dump scheme. Now, what might happen is the wallstreetbets admins get spooked by this, and they kind of start curtailing it a lot and hiding those gain posts, which kind of helps the momentum in the community kind of lessen out. This kind of brings me on to what my view is. And again, I'm super uneducated. I'm just finding my way in this. In my opinion, GameStop has massive potential with the right management to push into e-commerce. I'm not sure if Ryan Cohen can repeat it because it's a very different business. The gaming industry is so hugely competitive. And I think where he was early to market with Chewy, he had an easier time there. Again, just my opinion. So I'm personally not going to initiate any positions in GameStop until the volatility has died down and I can take a look and see what it's like. What I am going to do though is I believe that the short sellers will start selling off their other holdings. So I'm going to put money behind other overshorted stocks, and you can look at the zero hedge information below, and that will tell you the other ones. I mean, they're already seeing stuff like AMC Networks getting pumped up because of the short squeeze happening on GameStop. So yeah, it's going to be interesting any way you look at it. It's an exciting time to be in the market. If the short sellers do get squeezed out of GameStop, it is going to be, I think it's on track for the biggest short squeeze ever. So that would be an amazing turning point. But what the ramifications of that in terms of regulation for unorganized entities such as wallstreetbets, if that's what is decided, it's going to be huge. So, yep, stay tuned. If you want more content like this, hopefully it wasn't too long. please let me know, and I'll let you in on the other things I'm invested in. You might have seen I'm wearing the Ripple t-shirt, and I can talk more about that. If you like the video, please give it a thumbs up. Comment below if you think I'm off my rocker. Whatever, I'll try to respond to all of them. Thanks for watching, and I hope to see you in the next one. Cheers.